Okay, everybody, here we go. This is, without a doubt, my newest segment of Markets A Look Ahead. I want to talk to you about three keys. Three keys to this market. And you and I are going to focus on these three things like a freaking laser. And I'm going to talk about that as we move forward here. But before we even do that, I want to read two lovely headlines to you. I want you to ponder these two headlines. These just came out over the weekend. And I want to hear from you. What do you think? All right, let's do this. Here's the first headline. This is Market Watch. Concentrate. The Dow Jones Industrial Average is posting its best two-week run in 82 years amid 22 million Americans losing their jobs. Do you detect something wrong with that? Again, Dow Jones Industrial Average posting its best two-week run in 82 years amid 22 million Americans losing their jobs. Something's wrong there. But in this environment, I guess it's normal. Here's another headline for you. The S&P 500 is more concentrated in the top 5 names than ever. Now, this headline should again shed light on what is going on. What I have explained to you is going on. This is the Wall Street banks buying large cap stocks via the Federal Reserve funneling epic sums to these Wall Street banks. You can't make this stuff up. Those two headlines are epic. Epic. You can't make it up. Okay, so three keys. There are three keys here. But before we get to those three keys, we have some more groundwork to lay out here. We're going to get a lot of earnings reports coming in this week. And you can imagine they are going to be abysmal. Absolutely abysmal. Now, what's the takeaway from this market as of late? The worse the economic news is, the worse any news is, the higher stocks go. More than likely, that's what's going to play out here. This is not one of the keys. This is just something you need to keep in mind here. Earnings are going to come in. They're going to be terrible. But Wall Street or the mainstream media is going to spin it. They're going to spin it like this because this is what they always do. Well, it could have been worse. It could have been worse. That's why stocks are going up. That's what they always do. It's a distraction mechanism. The mainstream media, the mainstream financial channels, and they all get the same damn script. So they're all going to say the same things. It's incredible. It's absolutely incredible. Okay. Again, before we get to the three keys here, one more thing. And I've been beating this like a dead horse. We have to open up this dead economy. We have no economy. I mean, that should have been another one included in these headlines. We have no economy. We're dead in the water. And stocks make their best run higher in the last 82 freaking years. You can't make it up. It's impossible to do. So let's get to the three keys here. Okay. People, look. You're not going to lose. How many times have I said that to you? It's just not going to happen. I will never allow it to happen. Oh, that's it. So with that said, two of these keys I have covered a lot lately, but I want to put them together with the third key. Okay, the third key is a big one here. Key number one. Where do I always tell you to look first? Do I tell you to look at the stock market? No. I tell you to look at the debt market. The debt market is going to set the tone here for stocks. Now, The 10-year yield is the benchmark. The 10-year yield is where you need to have your eyes glued to, okay? Regardless of anything else, it's the freaking 10-year yield, which is a big, big, big fat key here. So we need to see the 10-year yield rising. If we see the 10-year yield dropping, that is a big warning sign to get out of the way. Stocks will drop. You know this if you've been following my blog for any length of time. Again, don't fall for the same dog shit. Look here. Don't look here. Again, the mainstream media, the financial channels, they all want you focused on the Dow Jones Industrial Average, the top 30 companies on the planet. There's a reason for that. So when they're telling you to look here, you got to immediately say, no, I should not be looking here, because they drive me nuts, okay? The mainstream financial talking heads, all fed their script. It's incredible. They read. They're handed a script, and then they read it, and you're supposed to believe, yeah, that's the truth. Nothing could be further from the truth. So again, you should probably ignore CNBC, Fox Business, Bloomberg. They're all dog shit. You got it? Okay. So that's key number one, is that 10-year yield. If we see the 10-year yield move up in tandem with this second key, here's the second key. You probably already know what it is. It's freaking crude oil, the lifeblood of the military-industrial complex, the lifeblood of this market. The entire energy sector is dependent on it. The entire financial sector is dependent on it. Why? The investment banks have insane investments in crude. I'm shocked to see that they have not yet propped it up by any real mechanism. You know, we heard about the great deal that the president made, which turned out to be the biggest flop, one of the biggest flops in the history of the financial world. That's okay. We don't care. So, key number one, 10-year yield moving higher, stocks will go with it. Key number two, which will work with key number one, crude oil going up. If you see crude oil higher, 10-year yield higher, where do you think stocks are going to go? And then let's look at the opposite side. 10-year yield drops. Crude oil drops. Where do you think stocks are going to go? These are two huge keys, regardless of what these earnings come out to be, because they're going to be rigged anyway. You know that. Oh, yeah, they could have been worse. Come on. We have no economy. We're laying off tens of millions of people. Key number three. You got it? Here we go. Key number three. If they manage to start jawboning more news, headline news regarding a possible treatment for the virus or a vaccine for the virus, this is stock market positive. So if you hear the president come out talking about treatments, good treatments, this is working, it's showing promise, or a vaccine coming sooner than later, boom, stock market positive. So let's put this together again. Key number one, the debt market, 10-year yield moving up in tandem with crude oil moving up, stock market positive. If you hear the president or anyone else, especially the president, you know, he's the big mouthpiece, talking about some kind of remedy here, some kind of a cure here, some kind of a vaccine. If these three keys align, regardless of what the abysmal earnings are going to be, one guess for you as to where stocks are going to go. Exactly. Up. And it could be big. Opposite of that, we could see losses here. My guess is this. We're going to see some stability in the debt market. Why? The Fed's buying all the debt. Period. The end. They're even buying foreign debt. We know this. It's no secret. It's everywhere. Look it up for yourself. The Wall Street banks will continue to buy the top 5 stocks. Boom. they're going to gain here. That'll push stocks up. That'll push stocks higher. But again, in this market, expect anything. Although, I mean, come on. It just seems so simple to me. The largest gain in this market in 82 years over the past 2 weeks, and tens of millions are out of work. We have an economy which we have no economy. So it should be pretty simple to understand what is going to go on here. Look, we don't need to be rocket scientists here to figure this out. All we got to look at is a couple of keys, 3 of them to be more specific. If we watch these 3 things play out, one way or the other, we are going to know what side of this market to get on. It can't be more simple for you. Now, I want to cover something here which is very important, maybe more so than the 3 keys here. Here we go. As all of you know that have been subscribing to my newsletter, I have put out 7 stocks, ETFs, over the past month. Some of these have been trade alerts. Some of these have been buy recommendations. All 7 have done exactly what I said they would do. Now, this is what I find disturbing a little bit. And even this morning, I opened up my email box and this is what I am getting. Greg, thank you so much. I made more money than I could have imagined on this trade. I went all in on it. Please do not go all in on any one of my trade alerts or any one of my buy recommendations. One of these is going to go wrong. I guarantee you that I'm going to put out a trade alert, I'm going to put out a buy recommendation, and it's going to go the wrong way. Never, ever go all in on any one thing. You always have to have capital reserves. That's number 2, okay? So I am thrilled that you lions out here who are writing to me, and there's been quite a few, and the same terminology, all in. Please don't go all in on any of these. When I put out a trade alert, if you read the whole alert, it explains to you the chances that this might go wrong, okay? I also outline how you should be playing these things. If you stick to that plan, you'll do better over time than if you dump all your cash into one position. Never do this. Never, ever do it. You understand? Now, with that said, I do have several other ticker symbols on my radar. We may get a new trade alert this week. I don't know. We'll see. They're very specific. There's no guessing involved. The only time there may be a little bit of guesswork with regard to my newsletter buy recommendations is if I put early buy. I'm kind of speculating a little bit. They've been correct as of late. But again, the trade alerts is where you really want to be focusing on. The early buy signals are important. But again, please, like I said, I want us all to win over the long run, and we all will win. So if you are one of those people here who are getting a trade alert from me or an early buy and then going in all in on it, you're setting yourself up for a possible big loss, and I don't want anyone to lose. We're not going to lose if we play this right, if we're smart. Over the long run, it is impossible. 0. There's no chance that we're going to lose. If you play this wrong, you're going to lose. And that I will be very disappointed. Okay? All right. So with that said, you know what the 3 keys are. Pay attention to these 3 keys here. Of course, I'll keep you on top of this market in the morning with my market report that I do in the morning and at night. We'll talk about it. And please follow me on Twitter. I actually post on Twitter, what you should be looking at. Look at the 10-year yield. Look at what it's doing. So follow me on Twitter. I post on all my social networks, Facebook as well. But Twitter is the one I think you should really be paying attention to. Please subscribe to my newsletter. There is a link in the description of this video. And right here, you see this traderschoice.net? Focus like a laser here. All right. Everything you need is on my website. You can even watch these videos on my website. I have a smoking chat room over there for you. It's all free with some really smart people there. So look at what they're posting as well. Ask questions. Even on my trade alerts, there's a comment section. So interact with each other. I'm counting on you, my lions, to help fill in some of the blanks here. I can't hold anyone's hand. It's impossible. So I want all of you to do what I always say. Rely on each other. Together we're going to make a difference in the world. All right? I can't do this on my own. It's impossible. So I need you. I need all of you to get in here, help each other out, talk about positions, put people on the right side of this as well. You understand? We're not going to let anybody lose. If you are part of my team, big team, global team, tens of thousands of people all over the world, let's come together here. Okay, like I always say, let's rely on each other because we are responsible for each other. That's my biggest thing. You know that. So let's count on each other for strength, okay, for guidance here. Let them play their game. You know who they are. We're going to play ours, and we will not lose. This guy loves you. Please share the video. Get it out there. See you in the morning. That's all.